Hold on to your hats. Remember earlier in the week I told you about President Trump and his tweet withdrawing his stimulus negotiators? Well, 3 days on and the talks are back on again. Or at least President Trump told the radio presenter Rush Limbaugh that the president wants a bigger deal involving more than either Democrats or Republicans are offering. The White House, this is after upping the White House bid to $1.8 trillion. Now, that's still less than the Democrats want. The Republicans don't want to go over $1 trillion. Investors like all of this. It's really quite weird, the level of dysfunction, but they seem to be enjoying it, at least from an investment point of view. We have the Dow Jones up more than 140 points today, well, you can see from the numbers. You have the tech stocks are also rising, and a slew of bank earnings that take place this week. Doug Peterson's with me, President and CEO of S&P Global. He joins me from New York. The discrepancy we've talked about many times between the real economy and the stock market, but this is never greater than we're seeing at the moment as the argument is over stimulus. Where do you think stimulus is most needed?
Well, first of all, thank you, Richard, for having me. Yes, stimulus is needed to help create and protect jobs. The last package of the PPP, the Paycheck Protection Program, helped protect 13.5 million jobs. We've seen the SME, the small, medium enterprise sector, really hurting, and the first program stabilized small jobs. And this is really important, is helping stimulate the economy by protecting people's jobs.
This week was the end of the financial year. Well, we got the numbers for the end of the US government's financial year. The debt rose by $3 trillion. I mean, it dwarfs anything that's ever been seen before. At what point should we be worried? I agree, I understand, not now. But at what point do we need to be worried about the rising US federal deficit?
Well, what's most important is to look at the components of the economy. What sort of growth do we have? Because if you can grow, you can actually outgrow the deficit. The worst combination is to have an increasing deficit with no growth and inflation on top of that. We don't have the inflation right now. We have very low interest rates, which is helping protect the liquidity of the economy and ensure there's a lot of liquidity available for banks, for organizations. But we have to look very carefully at what's going to be the growth output of the U.S. economy, and that's why people should be looking at the Paycheck Protection Program, stimulus, et cetera, because you want to get back on a growth trajectory.
But Doug, I noticed from your note you expect the US GDP to grow nearly 4% next year, and it won't be until late next year that it will have sort of evened out the amount of loss versus gain just on a nominal GDP basis. But that doesn't tell the story, does it? Because when 1 in 7 businesses have failed and so many more are unemployed, I worry that we focus on the numbers but not on the reality.
Well, you're absolutely right, because there's going to be a high level of unemployment that could stay behind. If you think about the drop that we had in our economy of over 30%, now we're going to see an increase of almost 30% again this quarter. Those kinds of drops are just something you can't believe. In one quarter to see an annualized drop of 30% in the economy, the kind of shock that brought to our economy of job loss, of people that stopped investing, people that were saving on the one hand, but they weren't spending, and they were not investing at all. This is what we have to see come back to the economy: investment and growth in jobs, people that have confidence in the economy to invest again, so that we can see the job growth and the economic growth.
Right, but Kevin Hassett, the former economic advisor to the president, said that he believed we were on the edge of an economic cliff. Now, I mean, I assume you probably agree with that, but I don't know that there's enough will to pull us back from it.
Well, this is what's so important for us to think about a couple of different factors. Vaccines are absolutely critical, and it's actually encouraging to see that the private sector and the public sector are working so well together to develop a vaccine very fast. And to get the vaccine out is going to help stabilize the economy. It's going to stabilize people's behavior and bring back some normalcy into our lives, which will also help stabilize the economy. Another factor has to do with the stimulus. And then there's another large factor, which is what about global trade? What are we seeing around in the rest of the world? And will there be a return to a normalized set of trade going around the world, which is also quite important for job creation?
So, good to see you, sir. Thank you. I appreciate it.